right, so I'm Scott Shechtman. I'm here from Nasdaq. Actually, I have to start by thanking our previous presenter. I don't know if anybody was in the room from that one. I guess a couple people. But talking about stock market dynamics around marketplaces and more retail marketplaces is very much on point for the topic that I'm going to go through today. And I'm going to try to go through, especially since we have a smaller group in the room, I'm going to try to go through a little bit quickly so that we have time afterward to chat, because this is definitely a small enough group that it'll be conducive to a discussion. So first, a little bit about Nasdaq that may be different from what people would otherwise expect. There are four parts to our business. Most people know the market services part of our business. This is where the Nasdaq stock market that people think of falls within here, but we actually own and operate almost 30 marketplaces globally throughout the US and the Nordics. Corporate services, that's where you see our listings business, so the sort of Googles and Apples and Amazons that are listed on Nasdaq, and a range of other services that we provide to those companies fall in there. And that's probably what most people think of when they think of Nasdaq. Information services is our data business. This is where we take all of the data that's generated by the markets that we own and operate, and we sell it. We sell it to traders, we turn it into indices, and we license those. And then at the top, you see the market technology part of the business. And this is the fastest growing part of Nasdaq, but it's also it's already a fairly large part. It's somewhere in the 15 to 20% range of Nasdaq's revenue is providing technology to others. So there is quite a large number of other marketplaces around the world to whom we provide the same technology that we use to run the markets that we own and operate. So a lot of people think of us as an exchange company, but we are really a technology company with capital markets roots. So we provide our technology to a wide range of industries. We have made big investments in technologies like blockchain and machine learning. We collaborate closely with our listed companies, so Amazon, Microsoft, Google. We work closely with them on a lot of things. We get access to technology before a lot of others would. And we now are prioritizing our investment in what we call new markets. Now, that's new markets from our perspective. In a minute, I'll show you a list of our typical customers, and it's a lot of exchanges, clearinghouses, central securities depositories. That's who we are accustomed to delivering to. We have a major strategic initiative and are putting a high priority, because we've saturated this existing space, of getting into other markets. So if you take a look at this page, this is probably hard to read from where you're sitting, and certainly on video, but this is a list of customers of Nasdaq's market technology business. So there's over 100 marketplaces. There's over 150 banks that aren't listed on here. There are regulators, and a range of other marketplaces. The purple ones are the ones that fall outside of the traditional capital markets. So you see gaming and wagering businesses there. You see digital asset marketplaces like crypto markets and tokenized markets. There's a digital advertising futures exchange on there. There's a loyalty points exchange on there. There's quite a range of different things, and we are now investing heavily in expanding beyond our sort of traditional space. So on this screen, you see a list of the industries that we use as examples where we're targeting. I mean, we have customers in most of these. If we don't have a customer in them, then we have a number of sort of advanced discussions or pilot programs in them. I'll go through a few of them in more detail, but you can see with a lot of these a sort of similar trend where technology is allowing buyer to meet seller in new ways, supply is meeting demand in new ways, price is being discovered in new ways, and as these industries digitize, you see room for a lot of efficiency, and you see room for sort of marketplace dynamics to bring a lot of efficiency and liquidity to what they're all doing. And some of these, like logistics and insurance, are accustomed to operating in very traditional legacy ways. But as they digitize their processes, you start to see where technology and price discovery can make for a much more efficient industry. So here is a zoomed-in subset of our customers that fall outside of the space that you would think of us for. So there's more than a dozen digital asset marketplaces where we provide not just core trading technology, but market surveillance technology. We're watching for patterns in the marketplace that indicate manipulative activity or bad actors or insider trading. So we use that in the sort of digital asset marketplaces because they look a lot like our traditional markets, but we also look to use it in gaming and wagering as an example. You see 3 logos on this screen that probably don't mean a lot to an audience in the US, but each of these is a dominant wagering provider in its region. Each of them has millions of customers, and each of them is running a highly transactional business that doesn't look anything like a stock market, but then can stand on the same sort of technology. So for example, we have unique auction methodologies. We have unique ways of monitoring markets. And maybe most importantly of all, and where a lot of these conversations are starting to go, when you have really high transactional volumes and really high data volumes, and you need all of this to run through your system quickly and without lag during peak times, that's where the sort of foundation, the platform that we put markets on top of, can be really useful. It allows businesses like these to focus on what they're good at, to focus on customer experience, customer segmentation, customer acquisition. In the gaming examples, risk management. They shouldn't have to worry if their platform can scale to the number of transactions that it's going to be seeing. They shouldn't have to worry if somebody's manipulating their market. That's something that we do, and we do really well, and that applies really well across all of these industries. And we're looking more and more to find ways that we can sort of get out of our box. So digital advertising futures, I mean, this is a market that's running like a futures exchange. Loyalty points, same thing. It's a B2B market. It's not for me to sell my frequent flyer points. It's for sort of banks that issue credit cards to meet airlines that from whom they need to buy miles in order to offer rewards. This company, Extraordinary Re, in the insurance space, this is a reinsurer that is taking unique, exotic risks, breaking them into little pieces, and then syndicating them and selling them out to customers. And the fact that those can be bought and then resold unlocks a lot of liquidity, forces a price discovery that takes a lot of efficiency out of the system. I mean, I had a meeting recently with a major insurance company CEO who was describing that fully 1/3 of the price that you're paying for insurance when you buy an insurance policy is due to the sort of all the middlemen and the inefficiencies of the process. So if you can bring buyer and seller together more closely, and if you can create a more liquid product that can be resold, you've got the makings of a much more of a disruptive business and a way to change an industry. So one way to think of this in the case of a lot of the marketplaces that are at this conference is you see a lot of what I guess we would call booking platforms, where somebody's reserving a table or a haircut or a dog walk or something like that. And then the only option that you'd have there, it's a marketplace, but your only option is really to go through with it or to cancel. And if it's something where, you don't need that dog walker anymore, but you don't want to pay the penalty, wouldn't it be nice if that was treated as an instrument that you purchased that you could then resell to someone else in your neighborhood? Maybe you're selling it at a discount, but that might cost you less than the cancel fee. And that's certainly healthier for the marketplace to have people able to do that. You also have these assets that people are now buying. They're more valuable when they're liquid. So we'd love to find booking type platforms that want to be a little bit more like two-sided marketplaces that have an interest in a secondary market, because we think that unlocks a lot of value and creates a healthier ecosystem. And then real estate's another good example. This sort of overlaps with the digital assets because you see so many people now trying to tokenize real estate, but then not really sure how to trade it. You're sort of unlocking this ability for a different category of investors to buy buildings or houses in subsets. They then come to us to figure out how do they trade these things and how do you create a marketplace out of that. So some of the things that we look at, and we do provide advisory services around these things too, sort of at the earliest stages of a market, who are the customers? What sort of access do they have to the market? How do you handle security? How do you make sure that what you're delivering is reliable, available, that it's robust? If it goes down, it recovers. how are you handling data? What's the model around the data? We do a lot of work with this because we collect a lot of data from our markets and we sell them ourselves. And then, doing this for others teaches us quite a lot as well. And then the governance model. A lot of exchanges and marketplaces in our industry are owned by some of the people that provide liquidity on one side or the other. So either the supply side or the demand side is frequently found in the cap table. And that's something that we think a lot of other marketplaces ought to think about, where they're struggling for the network effect. So, toward the middle, you see price discovery. I mean, this is all about what's your market model? Are you running auctions? Is it a request for quote model? Is it a true two-sided marketplace? How do you handle matching then between buyer and seller? Or do you have complex order types like limit orders and good till cancel orders, or other interesting, unique, complicated things? In some of these gaming and wagering examples, we have used a sort of a complex parimutuel auction technology that we have to replicate horse race betting products. We replicate win bets and superfecta bets. We do it in a way that's more conducive to liquidity and to less marketing spend on a more speculative product, because it can live within the same pool and in the same market as the others. And then on the far end of this slide is what we would call post-trade. So this is everything that happens after the match. What are you doing to track ownership of this good? What are you doing around delivery? How are you handling payment? I mean, some of these things in a retail marketplace probably, payment, for example, probably gets outside of our scope when you look at a retail marketplace. But so many of these things are critical to the marketplaces that I hear talked about at this conference. We are not going to help them with their customer experience or their UI or a range of the things that are critical to those marketplaces. But in terms of the transactional foundation and the data model that they sit on, it's the same. And it's a shame to see people reinventing that wheel when we've got something off the shelf purpose-built for exactly that. So I will not dive too deeply into the technology because I will get myself into trouble not knowing all that much about it. But essentially, we have a platform that we've built. The core of this platform is a messaging bus that is purpose-built for marketplaces. This is getting information and data from A to B without losing it at great speed, without any possibility that it's going to fall down during peak times. It runs in the cloud. It runs on-prem, which I don't think many people in this room would care about, but in the exchange industry, people like to run in their own data centers a lot of the time for regulatory reasons. But we've built this specifically for the cloud, and then integrated onto the platform, we have a series of business applications that we've built that lead to the sort of market model and the way data gets distributed. We've got machine intelligence modules and blockchain-based modules that we can plug in, but it's also designed to be integrated with third-party applications, because we rarely handle, all aspects of the marketplace from soup to nuts. We are usually a piece of the puzzle, and our greatest strength is probably the foundation, and then the sort of price discovery model. So, capabilities. When would you want to think about capital markets capabilities for your market? To me, everything that's on this screen is interesting when you have a marketplace that becomes fairly successful. So, are you currently experiencing, or do you hope to experience, very high transaction volumes? Do you need to experiment with different market models and order types? Is scalability ever going to be a concern? Security? I mean, complex multi-legged orders. Certain things like, do you want to buy something but only if you can sell something else? There's a range of problems that have been solved already in the capital markets, where the maturity that you see in stock markets and FX markets and fixed income markets, they've solved these problems. And a lot of what Nasdaq has done is taken the software that does that and made it maybe a bit more generic and deliverable. So we have a global support network that rolls this out. Our exchange customers that you saw are based in every corner of the world, and we're actively looking at ways to expand to other industries. So I'll stop there. We're almost out of time, but I've left a little extra for questions, if we have any.
What's the most common, I guess, you said you usually add a piece to an existing infrastructure.
Yeah.
Out of all the different pieces, is there one that you guys find that you're, seeing implemented the most out of the full product set?
So the one that starts it off a lot of the time is our market surveillance capability, where we track patterns in a marketplace and try to detect usually undesirable activity, but I suppose it could be used to detect desirable activity as well. It's a machine learning based pattern tracking system. We work with the customers to figure out what are the patterns in their market that they want to be alerted to. It serves up alerts. It also uses machine learning to prioritize the alerts based on the ways that people, that operators of the surveillance system will then, determine, well, every time this alert comes up, it kind of gets closed out. This alert seems to get drilled into deeper. So we serve them up in that sort of priority order. And then as they start to use the market surveillance software, they start to realize they can rely on us for a lot of other things, and that we can probably save them money by, so many of our customers have built their own. We replace in-house builds a lot of the time, and when you're dealing with somebody that does it at scale for 100 plus customers, it's cheaper to deliver. If you've got someone who's doing it at that scale. So we'll often start with the surveillance and kind of move from there, but it really depends. Anything else? Great. Thanks a lot.